My name is Dave Zaegel, President of CWOs for Hire, located in St. Louis, Missouri. We specialize in financial planning, retirement planning, insurance planning, tax planning, and more. Let's discuss saving on self-employment taxes by choosing to be taxed as an S corporation. If you are operating as a sole proprietor, or perhaps even in a partnership, then you may be sending more money to our federal government than necessary. An S corporation allows you to reduce your self-employment taxes by only paying those taxes on the salary that you take. All other distributions from an S corporation will avoid self-employment taxes. First, a few details. When you set up an S corporation, you'll have to pay yourself a salary through payroll by determining reasonable compensation and sending regular tax withholding payments to the government. Also, you'll have to file a separate tax return for the S corporation itself, and then the K-1 form for the S corporation gets entered onto your personal tax return. So the question I always get asked is, why should I set something up where I'm going to have to file an extra tax return, start paying myself through payroll, submit payroll tax filings, and do all the work to determine what a reasonable compensation is? Let's go through an example to illustrate why. We'll start with the sole proprietor. Assume that you make $100,000 after you pay all the business expenses. Now, to step back, when you work as an employee for another company, you pay 7.65% in taxes for Social Security and Medicare, and your company matches that amount for a total of 15.3% of your salary going to the government. When you are self-employed, you get the privilege of paying all 15.3%. So if you make $100,000, then you're paying $15,300 to the government for Social Security and Medicare in this example. You do get a small deduction on your personal tax return for self-employment taxes paid, but to keep the math simple for this example, we'll use the full 15.3%. Here's the trick. Do those big corporations pay Social Security and Medicare taxes on every dollar they make? Of course not. They pay those taxes on the payroll to their employees. So why shouldn't you do the same? Now let's assume an S corporation makes that same $100,000, but now we determine that a reasonable salary for what you do is $60,000, and you pay yourself that amount through a payroll. Now you pay the 15.3% of self-employment taxes on your $60,000 of payroll, and the remaining $40,000 that you earn from owning the business is not subject to those self-employment taxes. The end result is self-employment tax of $9,180 for an annual savings of $6,120 versus being a sole proprietor. As I mentioned before, you do get a small tax deduction for self-employment taxes paid, so the net amount will be a little under $6,000. Still, a tax savings like this is well worth the administrative hassle. I'll make one caveat with all this. Please don't try this at home. Please make sure you get the help of a CPA that knows what they are doing in this area, especially when determining what your reasonable compensation is. The last thing you want is an IRS audit where they determine your salary is way too low, and now you owe additional penalties, interest, and taxes. Electing to be taxed as an S corporation can potentially provide a big annual tax savings if done properly. We help our clients with this all the time. We hope this helps. Also, if you or anyone you know is looking for a financial planner who can assist you with investment planning, tax planning, or life insurance plans, check us out on the web at the address below.